There is no middle ground in today's housing market.
We started seeing a climb.
Sales of existing homes rose sharply.
So the homes that have been selling are at a higher price.
Let's begin.
All right, in 3, 2, 1.
It's time to cut through the clutter.
Refinancing your home loan.
This is your source for the latest real estate and home financing news. You can actually use.
My prediction is that most predictions will be wrong.
It's the Market Snapshot.
Going live.
And now, here's your host, Dan French.
Welcome back to the Market Snapshot. This is Dan French from Nova Home Loans, your go-to mortgage specialist here in Las Vegas. You can stream us live online, KDWN, News Talk Radio. You can stream us live online. You can also download our app. And, Chuck, what other ways can they get a hold of us? Can they text you? Oh, they can text us. Talk and text lines are open.
There's no rhyme or reason or way that they can't get a hold of us.
That's it. Also, I have a new website. I want everybody out there to go check this website out. It's danfrenchloans, LOANS.com. Has all the past shows. It's in clips, so it's going to give you portions of the show. Also, it's going to have educational videos. A lot of good information about me, what Nova Home Loans does, and what they have to offer, right? It's all about me, right, Chuck?
All about me. me.
Don't you have something going on?
We're together.
Oh, yeah, that's
Not
right.
like that.
Oh, come on. It's Valentine's Day. Greg's gone. So I got to have somebody else now.
All right, you can be right next to me.
I'm going to on the other side, all right?
Yeah, you can sit right next to me.
So you didn't get nothing for your girl for Valentine's Day, huh?
Nah, I give it to her every day.
Not even a poem? Did you wake up and you had like rose petals and you just presented a poem like,
no.
Hi, it's Chakits Day, and it's Valentine's Day, and that's it.
Oh, she gonna get something.
Oh, is she? Oh, I see what's going on. All right. All right. Hey,
you like that one, huh?
Maybe make it while it's hot.
Make it while it's hot.
Make it while it's hot. Also, we're going to go over housing news and events. We also still have to go over interest rate trending. We're going to talk about what oil has to do and how it relates to mortgage interest rates. And we're going to give away a movie tickets. We're going to give a coupon. A coupon, right?
Coupon.
Or is it a gift card?
Gift card. I like
it's a gift card. Okay, gift card. Gift card away for 2 to Galaxy Theaters. And Mr. Producer, the man.
So wait, this is free stuff you're giving away?
Free stuff we're giving away.
Coming in hot with our free stuff giveaway.
Free stuff.
By free stuff, you mean
Free booze and free food.
Hey, that's a good one.
Tell them what he's won, Bob.
There you go. That's free.
Free.
We're going to play a movie quote. If you can get the name of the actor and the name of the movie,
I'm playing. Go ahead.
you can get a free Groupon. Oh, I'm sorry. Gift card to Galaxy Theaters. Go ahead and play that movie quote.
How can we be expected to teach children to learn how to read if they can't even fit inside the building?
That's a good one.
I know this one.
Yeah? I don't even know what it is, so I'm going to have to ask the producer. No, I know what it is. But anyways, if you can guess that movie quote or guess the actor, you have to guess both.
Okay.
Now, and you also, here's the thing. I want you to call in with a question relating to financing and real estate. It's not just about it being Valentine's Day. It's a perfect opportunity for you to take somebody to the movies tonight. But you got to have some type of question, right? Some question with it.
A real one.
A real one. Like, hey, I'm planning to paint my walls blue. What do you think about that? That's not a real question. I need something pertaining to what I do, right?
That's right.
And what Chuck does, right?
Oh, you got jokes?
You're a silver trader, right? Let's go over housing market statistics. Bring it down.
This is where we bring it play by play, week to week. For single-family residents, according to the multiple listing service, we actually have a total of 7,236 properties currently listed on the market today, which is we are actually up by 1.4% since last week. 87% are private sales, 10% are short sales, 3% are actually bank-owned properties. The number of single-family residents sold last week were only 313 properties, which is we're down 33% from previous weeks.
Wow.
And I think the problem with that is the closings just got transferred to the following week. So next week should be a lot higher than where we're at. As far as for inventory for single-family residents, we are at about a 5-month supply at this time. If we take a look at the rental markets for the single-family, 59% of the rentals out there are single-family residents, which is down by 2% from the previous week. So
renters are down?
Yeah, for the single-family residents, so They're moving pretty quickly.
Okay.
A lot of people are starting to rent.
Right.
So that's a pretty good sign.
Why is that?
For investors. Probably what's happening is the price is getting too high, and people are like, hey, we can't afford it. We're just going to go ahead and rent.
See, and that's what I was afraid of.
Yeah.
You get to a point where now pricing's too high, mortgages are too high. The average wage earner can't qualify for a home if they're trying to get a loan. And guess what? Now they got to ask people that they probably wouldn't ask, let's say a couple years ago, hey, do you want to jump on a loan with me so we can at least afford the payment?
Correct. Now keep in mind, this data is pulled every single week. So we're going to see dramatic increases that go up and down. So, what I tell you, you have to understand, it's just play by play, week to week. But when we take a look at it, we need to take a look at the overall picture for 30 days.
Yes.
Okay. But now let's take a look at for the single family residents. The median price has increased. Last week we were at $220,000. Do you know where we're at today?
$221,000.
Nope, not even close. We're at $228,500, which is up by 4%.
How? How does that happen?
Because remember, the data that we're pulling every single week. But if we take a look at it as a whole, those numbers are going to drop.
Right.
Because we're taking an average only every 7 days.
Right.
If we take an average for every 30 days, then those numbers are going to be different. But because this is week by week. So everybody that closed last week was at $228,500.
Yeah,
that's
good.
Crazy. The average days on the market is 40 days.
Do you see that going up consistently?
No, I'm going to see that going back down. And I think the reason why is because we didn't have that many closings. Everything got pushed over to next week, and everybody's starting to come out into the marketplace. But the good news is that what I'm seeing is that, the sellers are really giving out closing costs right now, and they're really pushing their properties to get rid of them.
I think down the road, though, too, I think as this goes, properties, this could start to go the other direction, though, too, where if you start to see there's not a lot of properties out there that maybe they're not going to give these incentives, because typically you're a seller, you're giving an incentive to get closing costs because there's abundance of properties, right?
Correct.
But now that this could be dwindling, it could go the other direction.
That is correct. Moving on to townhomes. Now, townhomes for the median price today, we're at $143,900, which is down by 9%. Last week on a townhome was $159,000 to close with an average of 45 days on the market. So if you bought a townhome last week, you actually bought it at a very good price. The total inventory for a townhome right now, we actually have a total of 585 properties currently listed on the MLS, which is up by 4.3% since last week.
Right.
So more inventory has increased, okay? 86% are actually private sales, 10% are short sales, 4% are bank-owned properties. The total number that sold last week were only 36 properties, down by 30% from previous weeks. The average days on the market, I don't know if I mentioned this, but it's 45 days. The total inventory, we have about a 4-month supply. Now, townhomes counts about 6% of market share for rentals, which is we're down by 1% from previous weeks. This right here is an indicator that if you're buying properties to rent it out, people are starting to rent properties now.
I think, too, we had a show about millennials and people buying investment homes because it's a primary residence. They're trying to see, look, you have abundance of renters out there.
Yeah.
They're saying that they're not building enough. And I don't understand the reason behind it, because I think you should rent only because you have to.
Yeah.
But if you're building a bunch of properties that are going to be rented, or not properties, but apartment complexes and things like that, if you can't build them fast enough, I don't understand where the big frenzy's at. And I think the only indication you could tell me is the fact that the properties are increasing at a rate and the payments are higher at this point that
Correct.
Nobody wants to jump into a mortgage. So what they're doing is they're buying investment properties.
Correct.
And they're renting them out because they have renters now, abundance of renters that's going to come in, and somebody's going to rent that out.
Correct, because interest rates are still low where, if you're leveraging out your money and you're putting down 20%, you can make those returns because of leverage. But if you're paying for it cash, then it's not going to make sense.
Well, then it opens up this door, though, of is it cheaper still to have a mortgage than it is to rent?
I mean, it just comes down to the circumstances of that person that's buying the property.
And location, probably. Also
Correct.
other things. Now, let me say this. If it's $228,
500.
okay. You come in, what is the average rent right now? Do you have any idea?
The average rent right now is about $1,200 throughout the valley.
So on a $228,000 home, that's almost even.
Correct.
So it's right there. So it's really now a personal choice.
Correct. Okay. Moving on to townhomes. If we take a look at townhomes, the median price as of today is $86,000, which is down by 12%. Last week was at $97,250. The average days on the market is 30 9 days. The total inventory is 1,101 properties, we're up by 4.3% since last week. So more inventory is coming up on the market. 89% are short sales, 7% are private sales. 89% are private sales and 7% are short sales and 4% are bank-owned properties. The number of closings that we had last week for condos is 52 properties. We're actually down by 26% from previous weeks. The total inventory, we have a 5-month supply.
5 months of inventory.
That's
what's
for
average?
condos.
What's average?
The average is around 6.
Okay.
Now, once we start getting above 6, that's the rule of thumb.
Okay.
But here's the thing. As our economy grows, that number changes. So
Right.
you can't hold me to the 6, okay?
Right.
Now, condos hold about 25% of market share today, which is up by 3% from previous week. Now, let's move on to the overall market. I'm talking about duplexes, condos, triplexes, everything.
That's
high rises.
Is that a small portion of our market, though, isn't it?
It is. And I'm really breaking it down for you because
Right.
sometimes people just want to buy a condo.
Right.
And if that's the case, you need to know within your marketplace where you stand, what that median price is. And this is the reason why I'm breaking it down for you.
Right.
But now I'm going to take this information and compile it overall.
Okay.
The overall inventory, we have a total of 9,807 properties currently listed on the market, which is up by 6.2%. This is telling you that we're starting to get more and more properties on the market. Now, 87.8% are private sales, 8.77% are short sales, 8.4% is bank-owned properties. The total numbers that we sold last week was 418 properties, down by 31% from previous weeks. The total inventory we have right now is 6 months. Okay.
Wow.
Now, let's take a look at this as a whole. As far as all the properties that are currently on the market, let's talk about financing. This is important because certain homes may only qualify for that type of financing. So let's move on. Cash. Obviously, all the homes that are on the market, it's 100%.
What's the percentage of cash right now? We had it in 70% at one point during the time after the boom and everything, and when the whole market went into recession. 70% cash.
That's correct. But this is what the sellers will accept. Okay?
Okay.
So this is the consideration of the type of financing. So 100% cash. Only 94% of the homes out there will accept conventional.
Okay.
61% will accept FHA. So if you're an FHA buyer,
what does that mean, though? I mean, when you say 61% will accept it, what does that mean?
That means let's say if you had 100 homes that are currently on the market, only 61 homes will allow FHA financing.
But why?
The reason why is because when an agent takes a listing, they take a look at the home, and they want to make sure that it's FHA qualified, because when a buyer is approved for an FHA loan and they do an appraisal to the property, it has to meet those guidelines in order for it to appraise.
Some of the properties,
and some of the homes will not meet
Right.
that appraisal because of the condition. It's not habitable.
Right.
Okay? And the problem that we're having here is that, some of these agents won't accept FHA or VA because a lot of the homes are still a little bit overpriced, and there are a lot of flippers still out there, and
Really?
they want cash.
Flippers are still here.
Yes, flippers are still
Did
here.
you watch that show?
No, I don't watch that show. But I was inspired, though.
Okay. That's why you're in real estate, right?
That's right. So, back into the marketplace, VA, only 57% will accept VA loans.
Wow.
Which is, I don't know.
I'm going to bring something up,
Yeah.
and I'm going to make it real short and sweet here. I have a client right now that's trying to get a HUD home.
Yeah.
Trying to go through VA financing, but they're missing things. Doors, they're missing things.
It's not qualified.
No, and sinks, they're gone. You can't get it.
You can't.
And here's the thing. HUD doesn't want to get that approved until you get approval from your underwriter to say, yeah, we're going to go ahead and fix that. So there's a problem. You order the appraisal, and then the appraisal comes back saying this has to be a contingent on fixing
But you still can get those type of deals done.
Well, you can, but I'm just saying there is a lot of hoops to jump through. Now, going FHA or VA, it's a little bit difficult. Conventional, I think, is a little bit more lenient in those situations.
Correct. 1% are actually owner will carry, and less than 0.5% is lease option. This information is very important to you because here's the thing. If you are an FHA buyer at 285, 500? Is that or is it 287?
287, 500.
Okay. So if you're an FHA
loan
buyer,
amount.
so if you are an FHA buyer, this is going to tell you you are only approved for 61% of the market. So your margins are narrowing down of what you can look for.
And what you're explaining, so I can let everybody understand a little bit more in depth, you're saying there's tiers of offers being accepted. Is that right?
Correct.
So you have a cash buyer being number one typically. Now, if a VA buyer or FHA buyer come in, they're a little bit lower on the totem pole. The only thing that's really going to really have a strong offer, I think, for cash is if you're outbidding that person that's buying cash.
Yeah.
But then also it's a conventional buyer because they know it's a little bit stronger.
Yeah.
You know, the client comes in, they got the money, they got the down payment, they got the credit, they got all these things that's needed. So that's very comparable, and they know that the person that's selling the house knows they're going to get it sold.
The only thing that's different about cash is you can close quicker. Okay. Not only that, you don't have to order the appraisal.
Okay.
Now, what's really most important here is we got to look at the sold terms. As far as last week on all the closings that we had, what are the percentage that broken down? 33% were cash buyers, 33% were conventional buyers, right? FHA was at 26%. So if you're an FHA buyer, you're in that arena. You still can get a home, and you still can beat out conventional and cash buyers. You just got to work with an agent that's very aggressive, that has a tenacity, that's going to go out there and write multiple offers to get the deal done and structure the deal correctly. VA is only at 8%. I don't know why VA buyers are not taking advantage of today's market.
Let me say something about that, though. I got a lot of VA buyers coming in here, and I'm telling you, listen, they're not a big part of that market. I don't think they're a huge part of the market, but they're out there. And the thing is, they come out and they say, you know, they always have opportunity because of the leniency on VA loans. Yeah. I've had more people come out VA, even though it shows 8%. I've had more, and I welcome them because we have a VA underwriter in-house. It's very streamlined. We offer competitive rates to most of our people out there that do offer VA financing. A lot of them, you know, that only offer VA financing were just as good, if not better, in a lot of cases with rate compared to them. So what I'm saying is if you're out there and you're a VA buyer, there's no reason why. Don't feel discouraged because there's only 8%. There's still a lot of them out there. I deal with a lot of them, so I just want to let you know if you have questions, call me.
Now, I want to break it down for FHA buyers, and this is important because majority of the clients that I deal with are FHA buyers. Now, as I mentioned today, the median price is at $228,500, okay? And we talked about the overall inventory is 9,807 properties. If we break this down, the inventory just for FHA buyers alone, you're only going to have 1,892 properties to choose from, which is only 19.2% of market share. But you know what? Let's break this down even further. So, out of 1,892 properties, right, only 84% will accept private sales. 84% are actually private sales, which is only 1,595 properties to choose from. The average days on the market for something like this is 34 days. So this tells me this is where the majority of your buyers are going to be. And if you're an FHA buyer, this is where you're going to be competing against with. But you're not going to have that many homes to choose from, okay, because you're competing against everybody. Now, short sales, there's only 298 short sales, which is 16% of the market, which is 95 days before an offer is accepted. So if you're constantly getting beated out because you can't pay for your own closing costs, maybe a short sale is the way to go.
Right.
And what I like about short sales is all the buyers that want to buy now that are FHA, they want to move into a home within 45 days of a fully executed contract.
Absolutely.
This is going to open your doors and your horizon more, and also to get your offer accepted. Not only that, we can ask the bank for closing costs. Majority of the time, the banks will pay for the closing costs.
Yep.
Bank-owned properties. There's only 93 bank-owned properties at this time, which is only 10% of market share. The average days on the market is 64 days. The reason behind this is because probably the asset manager, they're actually looking for certain things that need to be done to the home, and the transaction is just taking a little bit longer. So the moral of the story here is that if you are an FHA buyer and you're qualified for around the $228,500 or below, you're going to be in a competitive market. You really got to get it with an agent that's very aggressive, that's going to go out there, hit the pavement, and constantly look at homes and constantly write the offers, okay? Now, if you are above that purchase price and you're not a FHA buyer, you can pay for your own closing costs. You're going to have a shot of getting your offer accepted, and you're going to have more a variety of homes that you can choose from.
So, Chakits, let me ask this question. If I'm a person out there and I'm wanting to get information on what location I should be buying in, how do you approach that?
Well, I can't tell you the location that, to pick. I mean, I can't do that. That's steering. I mean, at the end of the day, it's really up to you. And if you're just a client that just moved out here, or, we deal with a lot of owners out of state, okay? We advise them that we can't do that. But the best thing to do is, we'll pick properties in certain neighborhoods that meet your criteria, then we'll go out there and you'll kind of get the feel to see if you like that property. And also you might want to drive out there at night too as well. So that way you have that idea of, hey, this is where I want to be. Then that's how we start really narrowing down your search from there.
Right. So I want to say this. Do you have anything else on housing statistics?
No, I'm about to pass out.
You're all right?
I'm done.
You're sweating over there.
I know.
It's Valentine's Day, man. You got to keep your head up because you got to go talk to the wife.
That's right.
You got to make sure you got to act like you're actively listening.
Mm-hmm.
Yeah, so you walk in the door and she's going to be like, Chakits, da 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 da, and you're going to be like, what'd you just say? You got to get that Red Bull in you.
No. I just say, okay, I got you.
Okay. You just nod.
Yeah, I got you. I hear you.
You know what you should do?
Yeah.
You should record it. That way, when if you forget something, then you can go in the kitchen or somewhere and you can like listen to what you just said, and that way you won't forget things.
Yeah.
Let's talk about application news. You ready for this?
I'm always ready.
All right. A sharp drop in interest rates prompted more home owners to refinance their homes this last week. Total mortgage application volume increased 9.3% on a seasonally adjusted basis from the previous week. Applications to refinance a home rose 16% from previous week, which was last week. Seasonally adjusted, those to purchase a home rose only 0.2%. Very, very small increase there. Purchase applications are still up 25% from a year ago, indicating strength in the future home sales. And interest rates were slightly lower than 1 year ago. And I told you about this. You know, the start of 2015, rates were great. And I thought it wouldn't come back, and it came back this beginning of this year, 2016. So the average contract interest rate for a 30-year fixed rate mortgage with conforming balances 417 or less decreased to its lowest levels since April of 3.91% versus the 3.97% that they had previously. Lower interest rates. So what that says is that now's a good time to refinance. You know, if you have not looked at that idea, I think you should. We went away from that for a few shows. I memean, obviously for quite a few months. And rates just kept, hovering around the the mid to low fours. And, it didn't make sense. A lot of people already purchased or refinanced, and so they're out of that woodwork. But I could tell you this, now it's in the mid to high threes. And if you didn't do it because maybe you're on the fence and you're at, a high 4%, there's still that opportunity. So I highly encourage anybody out there, to sit down with us, 702-781-6682. Call me outside studio and we can sit down and talk and see if this makes sense.
What do you need to do, get started as far as the refinance?
I mean, it's like any other loan, but here's the thing. It's a little bit more streamlined. You can add in closing costs. The rates obviously are favorable, and you still have to order an appraisal for some of them, conventional for sure. But the idea is that if you can save $100 to $200 on your payment without really doing anything, why not do it?
So for a couple $100, you can save a couple $100 a month.
I'm just saying, if you have a rate that's about a point higher, then you're going to save some money.
Gotcha.
And it's money that you're just throwing away at this point. I don't think this window is going to stay open forever. I don't think it's probably going to be a very small window. Probably going to start to go back up to where it was at before. I don't think it's going to just keep going, but probably low fours is where it's going to be at some point, down the road here. I'm thinking probably mid-March, and then this window's gone.
Yeah.
So jumbo borrowers are out there also benefiting from this fierce competition with these loans. The 30-year fixed jumbo loan dropped to its lowest since April of 2013. And historically, the rate for conforming loans was about 25 basis points lower than jumbo loans. What that means is when you say 25 basis points or you talk about basis points, that's really like pennies on the dollar. That means it's 25 pennies. That's the way I would look at it. Very small adjustment, but it's a big enough adjustment to take notice of something. Because if it keeps going that direction, then you're going to start to see a lot of savings or a lot of increases in rate.
So what would you consider a big swing? 50 basis points?
I would say a big swing would, probably, 75, 100 basis points.
Okay.
I think that's a big swing. I think it starts to indicate that there's obviously some increase. Your cost of what would have been quoted, say for that morning, if you got 75 or 100 basis points where you lose in a day, which it doesn't happen often.
Okay.
But that's a huge indication that if you're in a rate or in a situation to lock a rate, you need to lock it instead of floating the rate. Stan French with the Market Snapshot. I'll be right back. We have a lot of show left. We're going to talk about, like we said, the interest rates, how they're trending. We're also going to talk about where mortgage and oil come together and how it relates to each other. It's Dan French with the Market Snapshot. We'll be right back.
You're listening to the Market Snapshot with Dan French from Nova Home Loans. Got a question about home financing or real estate? Call Dan now, 702-257-KDWN.
Welcome back to the Market Snapshot. This is Dan French from Nova Home Loans. I am your go-to mortgage specialist here in Las Vegas. I'm in studio today with Chakits ITZ from Simply Vegas?
Simply Vegas.
And how do you say your last name?
ITZ.
Krulsawat. 10 times fast, I'm going to give somebody $50 if they can do that.
French.
Yeah.
French.
Also, if you can reach us in studio, 702-257-5396. Any questions financing or real estate? You can also go to my website. I have a brand new website that I put out, danfrenchloans.com. Looks a lot of good information on past shows, good information on me, how I got into the business. It's all about me. Also, let's go ahead and give away those movie tickets. Anybody out there that wants to take their Valentine to Valentine's night movies on a Groupon, this is a perfect opportunity. But guess what? You got to call in with a financing or real estate question. It's not going to just be, yes, the sky's blue today and there's clouds, so let me get a couple of tickets.
Wait. The producer has a question. Can you use a Groupon on a date, like a first date?
Absolutely.
That doesn't look shameful?
No.
Okay.
Chuck does all the time.
Oh.
Chuck finds those shows downtown that nobody knows about, and you got those people on the corner, and they're just giving out free tickets and a free drink. And he says, baby, we're going to go out tonight.
I got you.
we're going to the show, and I'm going to get you a drink. We're going all out. Happy Valentine's Day to everybody out there. I just want to tell everybody thank you for tuning in. This is the Market Snapshot with Dan French. Let's do the movie quote right now. And
how can we be expected to teach children to learn how to read if they can't even fit inside the building?
If anybody knows that, because I don't even know it, but if anybody knows that movie quote, the actor and the movie and a real estate or financing question, please put that in there. Don't just call in and say, I got it.
Can I get a shot at it?
Chuck, why? What? I don't understand that question. You know, you're over here and, okay, let's see what it is. Go ahead. What's your best take? Give me something close to it. Give us a reference.
Zoo?
Yes.
Okay.
It's lions and tigers and bears.
All right. There you go. That's your hint.
Hey, here's the deal. Anybody out there that has that information, give us a call, 702-257-5396. Again, that number, 702-257-5396. We're going right back into mortgage applications and mortgage interest rates. So, jumbo borrowers are benefiting. Again, the 30-year fix for a jumbo loan dropped since April, the lowest level since April of 2013. And, a jumbo loan by definition is more than 3 times the median value of a home nationally. Did you know that?
Are they pretty easy to get?
No, they're actually very harder. They're a lot harder to get. They're very layered, and they have a higher layer of risk. So they have loan level pricing adjustments that are attached to these loans. Makes it harder for financing.
But you don't have a problem doing that, though, right?
Listen, case by case, that's not a problem, but I'm going to set the expectation different than just a normal loan. Mortgage bond prices finished the week higher, which pushed rates lower. Global economic weaknesses dominated trading. Concerns in Europe resulted in additional flight to quality buying a U.S. debt instrument such as mortgage-backed securities. The data was mixed, which did little to ease economic uncertainties. Weekly jobless claims, which does have a direct, it's really connected to what rates are typically going to do, but they came in at 269,000 versus the expected 281,000. So that's actually good. I'm also going to say retail sales rose 0.2% versus the expected 0.1%. However, stocks recovered a bit this week, which is good. Federal Chair Janet Yellen testified before Congress that last week the state of the economy was a little bit weak. And she also raised the idea that in December and indicated future rate hikes were on the way. Now she's saying, well, we don't know yet. We doesn't know. Things haven't shown that it's giving us confidence and getting that done. So signs of economic recovery in the United States are also mixed. As we know, we're a global economy. It's things that happen in China, Japan, it affects us. Also, last summer, the Fed officials primed the markets for Fed rate hikes in September, which never happened. They did it again, where they raised the commercial interest rate that the Federal Reserve raised to or put towards commercial banks, but yet the economy is still weak, and it still does not show them or give them signs that says, yes, we're going to start raising rates here in the U.S. A lot of it's global related. So what this means is that, look, mortgage interest rates finished the week approximately 1/4 to 3/8 of a discount point better. That's big. That's a lot.
How big?
You mean from what sense? From rates?
Yeah.
Oh, rates are probably rates are really going to affect people, and it's going to help them get refinances.
Yeah.
Because I really thought that window was gone. I thought the window decreased last year. I thought it went away completely, and then for whatever reason, we keep coming back to this cyclical thing where rates are better, they're really good, and then they start to increase, and then all of a sudden the economy and global economy starts to show problems, and then we have to push it back down, or things start to go back down the other direction again. And it just keeps happening. I don't think I've seen interest rates. It's been at least probably a couple of years, I think, since we've seen rates hovering or getting close to the 5% rate.
Yeah.
And I'm not saying that that's a good thing. It's a great thing for people out there as consumers buying a home. Money's cheap. If you haven't refinanced, it's cheap. You can still go in and get a lower interest rate. But at some point, the government's going to come in and say, we have to start raising these rates, or else they're just going to be, they're not going to be honoring what they said. And we haven't heard that before, but they are going to say, they have to keep their word. And I think once they see the economy recovery, who knows when that's going to happen? Who knows when this is going to come to fruition? But I can tell you, rates right now, money is cheap. There is no better time to buy. And I keep telling this to everybody. I said it last year. I thought it was gone, and it's here again. We got a caller on line 1. Hi, this is Dan French with the Market Snapshot. Who's this?
Hi, Dan. This is Kristen. How are you?
Wonderful. How you doing on Sunday, Valentine's Day? Happy Valentine's.
Oh, happy Valentine's Day.
Yeah. You have a big day planned?
No, I'm just out shopping with my daughter.
Oh, there you go. That's always good.
Yeah. We just drove to Boca Park, but I was listening to you on the way there.
Absolutely. How's Boca Park? Is it going on? Is it thriving right now?
Yeah, it looks like it is, actually.
Yeah, good. It's a nice sunny day, so it looks like there's some clouds that came in. I can't really. That's
I don't know what happened. It got cold and windy all of a sudden, and the sun is gone.
Yeah, I don't know. What's going on? You had a question?
Well, yeah. Well, I was calling to answer the movie clip you played. It's Ben Stiller in Zoolander.
Oh, we got a winner, but I want you to do something with me, though. I want you to throw out a question that maybe you had concern on in financing or real estate that you never knew or never had a question on, that maybe you just didn't understand.
Okay, so this is my question. So I am a tips employee, so obviously we don't claim all of our tips. So how will I ever be able to get a loan for a house? Like, is it better to just, because I save a lot. Will it help that I have a savings? Or, because obviously I only make minimum wage, but I make a lot in tips. So how will that ever work?
What do you do for a living?
Well, I'm a server, but I'm going to school right now for business marketing. I have a year left. Absolutely.
Keep going what you're doing. So the idea is you want to put those tips, obviously, in your taxes. You're going to be taxed on it.
Right.
Everybody in a hospitality business like we are, it's so easy to take that money and not claim it. And the problem is that when you do that, especially in this market, I'm going to tell you something, Kristen, if you're really in the market to buy a home, let's say you're not claiming everything and you try to buy a house now, the average median price home right now is $228,000. Very difficult on somebody that is is on a minimum wage income and maybe only minimally putting in how much they claim in tips. It's going to be very hard. So your goal is to claim as much tips as you can. Obviously, you don't want to overextend yourself, but realize the more that you claim, the better chance you are of getting the home that you want.
Right.
Versus if you just claim.
Go
ahead.
No, go Oh, so what I have in savings won't make a difference at all then?
No, and I want everybody to listen to this. Assets are great, and I always say cash is king, but the biggest driving force behind getting a loan is the ability to repay it. And you have to realize that if you don't show the income and you don't prove the income, and you're only claiming a portion of your income, it says to everybody out there that obviously, you make money, but you're not showing that you make money because whatever money that you make, it's taking X amount of dollars, one, that needs to be put into circulation for you to make the money that you do make. But then if you're not claiming it as well, it's a problem. They're saying you're a higher risk, and then there's only a minimal amount of how much you're going to get approved for. So the moral of all this is that if you have the ability to repay it, it's always going to supersede somebody that has $500,000 or $1 million in the bank. Obviously, if somebody has that, they can buy cash, right? But at the same time, you can also lose that very quickly too.
That's true.
So if you just do, if you put in some wrong, bets, or maybe you're down there making some sports bets like Chuck does, he's 90% of the time he's not winning. So, you don't want to go statistics like that. That money will go quick. But anyways, did I answer your question, Kristen?
Yes. I just need to start claiming more.
Yeah, well, claim more and just, keep on the consistency. And like I said, the ability to repay is very important in our business or my business. So that's what you want to look at. Okay?
Okay. Thanks, Dan. I appreciate it.
Absolutely. Happy Valentine's Day. The producer is going to get your information. I appreciate you calling in.
Okay. Happy Valentine's Day.
Thank you. Bye. So anyways, let's go right back into interest rates. So the idea of refinancing your home is right now. And I'm telling you because it's going to probably go away at some point. But I just see this every time. I see where globally there's problems within within a global economy that's consistently having problems with our interest rates here. And, I always say, one thing and then I read something different and it shows that there's weakness in our economy. Then I read that it's great, we're thriving, everything's great, jobs are increasing. And then you say, well, data shows that it's weakness in the economy, so they're not going to pull the trigger on rates. It's very hard to find out what rates are. And I think they're going to have to keep them low for people to, to really keep buying homes. The backbone of what we do here is the housing market. So, and I want to go back into something you talked about here in rent versus own, because it is your choice to rent versus owning a home. But I can tell you right now, with Greg coming on here, Greg Sinacori from Hilburn and Lean CPA, he talked about how you can save on the interest write-off. There's some other things that perks and things that you can write off when buying a home. The taxes that you pay on the appliances and things. This stuff's important.
So at the end of the day, it's
cheaper, really.
Cheaper,
yeah, because you know what? If let's say you're renting. Let's say I'm a person out there and I said, I'm just going to rent. I don't have any appliances. You're not going to get those write-offs on those appliances when renting. Obviously, there's incentives there. But then the tax interest write-off that you get from paying your mortgage on a monthly basis for that year, you're going to have probably anywhere from an $800 to $900 decrease a month.
Yeah.
Depending on your loan amount, obviously, but just a decrease in how much you're paying. So really that payment, when you say it's even across the board where $1,200 a month.
You just don't see it up front, but on the back end.
On the back end, at the end of it all, you're going to save some money. So if you're investing your money properly, the only time you should ever rent is because you have to. You had a significant credit impact.
Yeah.
Something, because you're going to have to pay it anyways. Also, rent goes up an average of 1% to 3% every year. Why would you want to rent? They keep building places to rent. There's no payback on that money. There's no return. You get nothing back. It's like me saying, hey, Chuck, here's $1,200.
Thank you.
Go do what you want with it. And I don't ever get anything in return other than I hope you had fun.
Yeah.
And that's not good. I mean, you want to, as a person, you want to obviously hold on to the money that you have, make the money that you have work for you. And I think that's what people need to start thinking about. Right?
That was deep.
It is deep. We'll just leave it at that.
Just drop the mic and just leave.
Let's talk about oil prices and how they really affect mortgage interest rates. So cheap oil means cheap gas, right? It also means cheap mortgages, and here's why. The economy is still increasing unsteadily. Providing cheap oil prices helps out the average consumer, but production has slowed in other countries for oil drilling. Did you know that? There needs to be a stronger indication that importing from other countries is there. Investors are seeking a safe shelter for their money right now to really ride out this storm because they're finding that it's a lower risk to invest their money in U.S. treasuries. So when U.S. treasuries are in demand, they get cheaper. And when treasuries get cheaper, U.S. mortgages usually do too. That means your interest rate typically gets cheaper as well. So the less obvious an effect of cheap oil on your mortgage, rates on home loans have been falling all year since 2016 started. I really thought it was going to go the other direction. You have the Federal Reserve raising 1/4 point. Now they're talking about raising it again.
Scaring everybody. Yeah,
and the thing is they're raising this rate to commercial banks, which in turn usually extends that out to consumers.
Mm-hmm.
But at this point, they haven't done anything. Actually, it's gone the other direction.
Yeah.
And that's one of the reasons why. Because there's cheap oil, cheap gas prices actually affect how people invest, how they invest their money into U.S. treasuries, which in turn affects the mortgage interest rates.
And you have to understand when oil prices goes down, what happens is the employees that work there, they get laid off. They're conservative. They don't spend money, even though that gas is cheap. And that's the reason why, it's a domino effect that just keeps continuing. So if we don't handle these issues now, we're going to have a big problem. But we could have a big problem.
And I could tell you this, the global economy has been increasing unsteadily. There's more than enough oil to go around because production is up and down. So there's really, we have that. We have it in place already, but big consumers like China are slowing down production.
Yeah.
Big producers like Russia and Venezuela, they keep drilling, and it's right now below $35 a barrel.
Yeah.
And when have oil prices have been falling really since 2014.
Mm-hmm.
And I'm all like you. I'm like, hey, you know what? Look at gas prices. I could fill up my tank for $60. But there's a direct effect in other areas. Production, oil, import from other countries, rates, how people are investing. People don't put all this into perspective, but there's a lot of things that come from that. So really, besides that, mortgage rates also thrive on low inflation. Inflation is the economy, is the enemy of mortgage interest rates. When you have high inflation, you're not going to have good rates.
Yeah.
It just doesn't happen. So going forward, what do you think is going to happen with these oil prices? Do you think they're going to start doing more production? Is it going to get steadier across globally, or what's going to happen?
I think it's going to go down until we make adjustments with the feds.
Adjustments how, though?
But we got to go back down to -0. We got to go negative.
Well, that's a global thing, though. I think
it is, but that affects everything. You have to understand that affects our economy. That affects China, Germany. Deutsche Bank, they're down. They may be going into a recession. They're asking for a bailout. But then what happens is it reflects back out on us.
Exactly.
Then we start getting hurt, and that's why we are in the position that we're currently in.
So if you say it's up and down, is it because one country's fine and all of a sudden they pop up their head?
No,
and say,
because they're printing more money. That's what it is.
Okay. And that's across the board. That's not just here.
That's across the board.
So,
and if you take a look at Japan, for the past 15 years, they've been already at -0. And their economy is failing. It just doesn't work at the end of the day. What I think needs to happen is we got to just drop our rates back down to 0, and we just got to just take the recession, and we just got to start rebuilding, because all we are doing is prolonging the inevitable, and the more money that we print, the more problems that we're going to have down the line.
So you think rates are going to stay low for a period of time?
It's going to.
And they're just going to keep printing money and then keep going up and down. Gas prices are going to keep going up and down. Oil is going to keep, having problems with people that are distributing it here, importing it here. They're going to have problems because their economy as a whole cannot produce the oil. And why? Because they're just laying people off and they're just not doing it? Is that what's going on?
Yeah. Here's the thing. The bubble, we already pricked the bubble. Something is going to happen. I don't know exactly what's going to happen, but I'm going to predict that rates will never go up to like 7%.
Well, that would be a normal market, 7-8%, in my opinion. That would be.
I don't think it would never go up.
But why?
And we will always talk about, hey, this is a historic low, but we've been low for the past like 5, 7, 8, 9 years.
So here's the thing about that. There's no sense of urgency when you hear like shows like this and places.
Yeah.
There's no sense of urgency that says, hey, I'm going to go out and buy. I told them last year rates are going to go up, which they started to do.
Yeah.
And then now they're going back down again. They're in the high threes. So is it because I'm only reading data that I can see, obviously up until a certain point? Is this always going to be this way, where beginning of the years or beginning of the months and that year, rates are going to start to get good, or at some point they're going to be really good, and then they're going to go up, and there's going to be this scare, show signs of economy, but they're going to keep printing money, and then what they got to do is obviously the treasuries and things that people are investing in, they're putting that money back, and what that does is it's driving the rates down again. So is there always going to be a reason, is the moral of this, is there always going to be a reason for why they're trying to keep rates low?
Well, I tell you what, if you're in the stock market, I already pulled out my money. A couple of things that I invest in is real estate.
Why would you pull your money out of stocks?
Because I don't want somebody to dictate about my money as far as, interest rates and all that stuff like that. It just doesn't make any sense. I have no control.
So you put your money in more of a slow yield. Is that what you're saying? Or no?
No, I put my money in real estate because it's tangible. I have full control of it. And if I make the mistakes, those mistakes
let's
are mine.
Look at this, though. Look at the market 3 or 4 years ago.
Yeah.
The market was bad. So if you say you have control over it, somebody or something had a big effect on how the market and how prices dropped and actually went underwater.
Well, you still have to rent anyway. It doesn't matter. Like, I just bought an investment property and leveraged out my money. My payments is less than $300 a month. I'm making about, $750. It doesn't matter if the market crashes and my property's only worth $2. I'm still making that cash flow. You have to have a place to live. Now, if the stock market goes down, then you're in trouble.
Well, I think everybody's in trouble.
Exactly.
And I think it's not going to stop there. But I can tell you this: if you buy an investment property, the return on your investment's always going to be there. But you got to look at the value. That tangible asset, what's the value of that worth?
Well, you're not buying it based upon the value. You're buying it based upon the cash flow that's coming in.
As an investor.
But
what if you're a primary residence holder and you're saying, I'm buying a home to make it where I get a return on my investment? I'm not in it for all this.
Well,
10,
if it's a
15
primary
properties.
residence, then you're not buying it for that reason. It's a primary residence. You're buying it because you're living in it.
Well, I think you have attachment to a primary residence in some shape or form as far as your feeling and emotions and things. But you know what? At the end of the day, you're still buying a property, and you're still. If you're going to do that, then why would you want?
Let me tell you this:
rent?
I live in a property right now. It's only worth $200,000. I bought it on the high side. I thought the market was down. To me, it doesn't matter because I'm going to live there, and my mortgage is less than $1,000 a month. I can't go find another rental property that's less than that.
I agree with you, but what I'm saying is, as a tangible asset, you're 100% right. But your goal is to not have that tangible asset lose its value. Because then it doesn't turn into an asset, it turns into a liability.
No, you're a speculator. But if you are an investor, you're buying based upon cash flow. It's just the way that you're seeing it.
Here's the way I would look at it.
I don't buy properties based upon equity position.
Everybody has different goals.
Yeah.
Everybody's got a different thought on what their plan would be. My thought would be you work it as on an annual basis. You don't know if you're going to get a ton of equity in a property. But what you do know is that if you have to rent or you can get a mortgage, I would definitely get a mortgage because of, if you look at a snapshot of 12 months, there is a potential for you to increase in your equity. Also, you get the tax write-off. Taxes on the appliances that you write off. There's a lot of incentives. So I think, yes, all these things are affecting rates. They're affecting our market. They're affecting our stocks. But at the end of the day, you have to be educated to minimize the damages. And I think you really need to, you got to look in the future, but you can't look so far in the future where you don't know what's going to happen. But you can probably get a good indication within the next 6 to 12 months how things are going to unfold and what your goals are. And you got to try to, mend those together. So I really think oil is going to go up at some point. I think it's, like they said, it's a cyclical thing. It's been down. It's been consistently down, but I think it's going to start to go up at some point. And, when you think about all these people that are working on these oil fields and things like that, they're being laid off.
Correct.
And there's no employment there. So guess what? Now they're going back into the workforce and they got to find a place to live. To work, excuse me. And then now they got to find maybe something that they're not even interested in or they've been doing. So all I'm saying is this. It's very important to stay in tune with us, with what the rates are doing, what market's doing, what the housing is doing, because it all is going to affect you. This is Dan French with the Market Snapshot. Want to thank you for tuning in. We're going to be on here next week, 11 to 1 p.m., same time. And as always, we do this show to make you smarter home buyers and smarter home shoppers. We'll talk to you next week.